What's up, you guys? My name is Aubrey, this is my channel, and today I want to talk about the housing market. Now, if you're anything like me, you've probably spent the last year to a year and a half looking at houses, waiting patiently, or I guess I should say impatiently, to buy your next rental property. And so in this video, I'm going to be breaking down what exactly we can expect to see in the next 6 to 12 months. By the end of this video, you should have a better understanding of whether or not there's a housing market that's coming, as well as what to expect in the next 6 to 12 months, as well as whether or not it is going to be a good time to buy a house in the near future. So let's get started. Now, over the last year, the housing market in the United States has been going absolutely insane. The median home price in the United States increased by 24.8% and is now sitting at $386,888. In addition to that, people are bidding in some cases hundreds of thousands of dollars above asking, and in other cases, people are waiting in line all day just to simply go view a house at a showing. And the crazy thing is that this housing market trend isn't something that is secluded to an individual city or state. It's something that has been observed throughout the entire United States from coast to coast, from LA to Texas to Florida and so many other states out there. But of course, what comes up must come down, and with record highs, should we expect to see some record lows in the near future? And is a market crash on the horizon? Well, before we dig into that, let's first discuss what exactly a market crash is, and let's talk about where we stand today in 2021, because the reality is the 2021 housing market is anything but the norm. Now let's first look at some historical data. Now, believe it or not, housing market crashes are actually pretty cyclical. Typically, a housing crash happens every 17 to 18 years, and this has been happening for hundreds of years, since the 1800s. There are only two really significant exceptions to this: World War II and 1979, whenever interest rates were increased by the double digit. These are really the only two historical examples that we can turn to that deviated from the traditional housing cyclical cycle. A typical housing cycle looks a lot like this, and like I mentioned earlier, it typically spans between 17 and 18 years, and it has 4 different phases. Phase number 1 is the recovery phase. This is the phase that comes right after a housing crash occurs, and this is whenever the recovery starts to take place in order to try to improve the housing market. Phase number 2 comes after that, and this is called the expansion phase. This is whenever the housing market is beginning to grow. There are less vacancies, there are more new constructions. The next phase that follows is phase number 3, and this is known as hypersupply. Hypersupply is caused really by basic supply and demand. There is simply too much inventory and not enough people to rent out or buy those properties. And then that leads us into phase number 4, which is the recession phase. And this is the phase in which home prices begin to plummet because of the supply and demand issue. Now, all in all, historically speaking, housing crashes have followed a very similar formula to the one that I just laid out, this 4-phase cyclical formula. But the exact context surrounding these housing crashes have been slightly different. And that brings us to the 2008 housing crash. Now, whenever we talk about the current state of the housing market, it's very hard not to compare it to the 2008 housing market because of the fact that for so many people, the 2008 housing crisis is something that is still very fresh in our own minds. Now, granted, I will be honest, I was 14 whenever the 2008 housing market crash happened, and so I certainly wasn't super well educated in what was happening at the time that it was happening. But I can look back and I can educate myself on exactly what caused the 2008 crash to happen in the first place. And ultimately, the 2008 crash can really be pinpointed to one thing, and that is subprime mortgages. Now, though there are a lot of reasons as to why the 2008 housing market and Great Recession happened, the subprime mortgage crisis is one of the main reasons as to why the housing market crashed in the first place. Now, a subprime mortgage is a home mortgage that is being targeted towards people that are subprime borrowers, meaning they are borrowers that do not have that great of credit and do not have that great of savings. They're basically less than ideal candidates for a mortgage. And in the years leading up to the 2008 Great Recession, subprime mortgages were beginning to gain a ton of traction. In fact, they really started to gain traction beginning in 1999, and it increased throughout the years up until 2007, whenever things came to a head. Now, the thing that's important to know about a subprime mortgage, especially in the context of 2008, is the fact that because these subprime mortgages were given out to less than ideal candidates, they oftentimes had different terms associated with them to accommodate the high-risk borrower. And this oftentimes oftentimes came in the form of higher interest rates as well as variable payments for the loan as well. Now, when it comes to the 2008 housing crisis, I could never talk about all of it in this one single video because there is simply too much to cover. There's too many details to get into. But in a really basic, scratching of the surface summary, basically the 2008 housing market crash was caused by the fact that banks were taking on these very, very risky loans, and they were starting to spin off into other types of investments as well, including mortgage-backed securities, credit derivatives, and more. And this was all based off of the fact that these banks were giving high-risk mortgages to high-risk borrowers. But in 2007, the dominoes began to fall, and the domino effect began to be felt throughout the entire country.
To the Wall Street firm. Take a look at the stock trading. It was fast and furious. It finishes today at $29.75. That is a whopping loss of $3.5 billion in market value today alone.
Subprime mortgage borrowers were beginning to fall later and later on their payments, and more borrowers were beginning to default on their loans altogether. In addition to more and more defaults on these mortgages, home prices were beginning to decrease. This is important because the people who were falling behind on their mortgage payments could no longer just simply sell their house in order to get out of the mortgage that they couldn't afford, because they now had negative equity on the house that they were stuck with. This is ultimately what led us to the 2008 housing market crash and Great Recession. And this is oftentimes what is being compared to whenever we talk about the future of the housing market in 2021. Now, in 2008, the reason as to why the Great Recession happened is because of these subprime mortgages and that people weren't able to afford the houses that they were in. And oftentimes, whenever people are discussing a 2021 or 2022 housing crash, oftentimes the things that are cited as what could be the catalyst for this crash are things like the mortgage forbearance ending at the end of September, as well as unemployment ending last month, as well as a lot of the COVID-19 programs that were kind of holding up the economy coming to an inevitable end at the end of the year. These, paired with the fact that the last 6 months has been a record-breaking housing market by every definition of the word, has led people to believe that we are inevitably heading towards a housing crash. And while I do think that the ending of these programs could have an impact on the housing market and they could cause housing prices to go down, I ultimately don't think that they will cause a housing crash, and there is a big reason for that. You see, in 2008, whenever people could no longer make payments on their mortgage, they didn't really have the option to sell because of the fact that the housing market had declined so much that they now had negative equity on their property. But in 2021, housing prices are still crazy high, and if somebody can't make their mortgage payment in 2021, they still have the option to be able to sell that house for a profit and get out of the mortgage that they can't afford. So ultimately, whenever it comes to the housing market, there is a couple of different questions to ask. Number one is, are we in a housing bubble? And I think the answer to that question is absolutely. I think that we are in a huge bubble right now, and I think that today in September of 2021, it is probably not the best time to buy a house. But the thing is that not all bubbles lead to a crash, and a bubble could simply lead to a market slowdown, which then could lead to a crash later on down the road. Now, I do think that we are due for a market slowdown, and a pretty significant one at that. I think that these COVID-19 programs coming to an end, paired with the fact that there is more and more inventory and less demand, I think that these things will send home prices back down to reality a bit. But ultimately, I think that we have too far to go to say that a market crash is coming anytime soon. Now, that's not to say that we won't see a market crash. I think that we could see a market crash in the next couple of years. I just don't think that we'll see one in the next 6 to 12 months. But I do think that we will see a significant market slowdown, which means that at the end of 2021 and at the beginning of 2022, that could be the perfect time to buy a residential property that you've been looking for. Inventory is rising, demand is slowing down, and prices are starting to stabilize. All of these things combined could make the perfect storm for any type of investor or any type of home buyer who's been waiting to pull the trigger over the last 6 months. In my opinion, I think the perfect time to buy a house, at least for the very near future, will be at the beginning of 2022. And I think we could end up seeing a market crash in the next 3 years or so. But with that being said, you guys, I know I don't make a ton of real estate videos on this channel, but I wanted to make this video because I've been paying a ton of attention to the housing market over the last 12 months because I myself am wanting to buy my first rental property, and I've come extremely close to buying that property over the last year, and ultimately I've talked myself out of it every single time because I am convinced that there is going to be a market slowdown. Like always, if you have any questions, comments, if you have anything to add, make sure to leave a comment down below, and while you guys are at it, make sure to hit the like button, hit the subscribe button, and hit the notification bell, and I will see you guys in the next video.